Welcome to the Transparent FX Academy. I'm Nick and I'm a top plotter in TradingView with over 190k reputation points. And in this video, we will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be analyzing the pair from a technical perspective, then we will go and see what we have when it comes to the order flow, so the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I want to speak about BTC USD. Now, why do I want to speak about BTC USD? Because at the moment, we do have quite interesting price action and structure. In fact, starting here from the monthly, what we can see is that at the moment, we're testing exactly the previous cycle high. From here, the previous bear market had started. At the moment, as we're entering into this bear market, we can see how we just reached exactly that previous high. Now, as you know, in the market, previous resistance, once it is broken to the upside, is turned support and demand. So at the moment, what we're actually testing is very strong monthly support and demand, from which a potential rejection to the upside definitely seems possible. Dropping down on the weekly time frame, what do we see? Now here in the weekly, we can see how the previous high, actually the previous support, now turned resistance, is exactly here. This green candle clearly indicates that when the market reached this area, it started to find support, meaning that now this previous support is turned resistance, which should be acting as a magnet for price for a potential correction before then more rejection lower. Going down on the daily time frame, what do we see? Now here in the daily, we can see that while the market was melting into the support and demand that we have just identified, which is basically the previous cycle high, which is all this box that we're currently seeing here, we're also creating an M pattern. In fact, the market has started to create this M pattern here. Now, what we know is that after a market creates an M pattern, it usually makes a move to the upside to go and complete the pattern at the neckline, which is the previous support turn resistance. So here on the daily, what we could expect is a potential rejection higher for a completion of the pattern at this previous support turned resistance. Now, if we go and see what we have when it comes to the on-chain data, so basically how Bitcoins are moving on and off from exchanges, we can see that during the start of this bear market, which is the black line, which obviously has been melting, which is the price, the purple line that we see here, which is the amount of Bitcoins on exchanges, has continued to drop as well, indicating that a massive amount of Bitcoins is getting bought because we have all this selling pressure coming on the market. But even though we have all that selling pressure, so Bitcoins are getting dumped on exchanges, anyway, the buying pressure is even bigger than that because all these Bitcoins are getting bought and moved off from exchanges. And since when we have cryptos like Bitcoin, actually the crypto, the most famous crypto like Bitcoin, this is a distributed ledger. Therefore, on the blockchain, all transactions can be traced. So softwares like this, what they do is they trace all these transactions. And what we can clearly see is that all these Bitcoins are getting bought, moved off from exchanges in cold storage. What this creates is a scarcity in the supply that we currently have, meaning that if demand gets increased, then the price should make a move to the upside as well to accommodate for this new demand. So in the long term, this is very bullish for Bitcoin, but even in the short term, we could expect at least the completion of this M pattern with a potential rejection to the upside. So how we could be approaching this potential short-term move to the upside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market, and provide to us one of our valid entries. At that point, we could be looking for a potential rejection to the upside for the market to complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can access now completely for free. The link, in fact, is in the description, and I really suggest that you go and check it out. Now, if you enjoyed this video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.